station in the Inland Empire. KCAA, the station that leaves no listener behind. Express 106.5 FM.
Welcome. This is Dr. Sharon Barnes on the International Wealth Builders Radio Show, and I'm so happy that you've tuned in to join us today. I'm very excited about our show today. We have a very special guest who's going to be talking about financing of various real estate projects, especially when it comes to accessory dwelling units. Again, this is the International Wealth Builders Radio Show with your host, Dr. Sharon Barnes. I am the owner of ADU Advantage, where we provide education, resource, and consultation services to help you make your accessory dwelling unit a reality. So we're here to provide information to take that thought of having an accessory dwelling unit in your backyard to a reality. And I've talked to hundreds of homeowners and investors in Southern California that want to take advantage of the new accessory dwelling unit laws. And one of the first questions they asked is there financing available? How can I finance it? Who can I talk to? So we're going to be dealing with these questions today. We have TR, the loan guy, with us. He has years of experience in the real estate market and loans and financing, very supportive. He's worked with me on a lot of projects, from traditional buy and sell real estate transaction to land development, and especially here in the last couple years, we've been working together on accessory dwelling units, helping homeowners actually get financing for the accessory dwelling units to provide for housing for a loved one, or to get rental income. The accessory dwelling unit laws have really been evolving so that we can have more housing units here in California, which we need. We know that we have a housing shortage throughout the country, and we all need to participate, and that's what the state legislature has decided, is that the big developers cannot build us out of this housing shortage. We all need to pitch in, and I think that the accessory dwelling unit laws have reduced a lot of the barriers to the average homeowner and allowing them to build an accessory dwelling unit. And I think that that's going to be a great opportunity for changing the wealth dynamic of your family, including increasing your retirement, doing college funds, and just creating generational wealth. So again, thank you for tuning in. I hope you stay with us throughout the remainder of the show for till 1 o'clock. And right now, we're going to ask TR, the loan guy, to introduce himself, tell us a little bit about himself, the company, and his experience. Welcome, TR.
Thank you, Dr. Barnes. Thank you very much for having me on the show. A little bit about myself. I have been in the mortgage arena for over 18 years. I started back in '04, got my big break with Lehman Brothers, a small business finance, before they went defunct. Started as a processor, worked my way up to become an underwriter. From there, I was a team lead. I was a training partner. I actually trained underwriters. I became an underwriting manager, also a underwriting branch manager, and from there became a loan officer and then broker, as we are today.
Well, thank you. Thank you for that. I appreciate that. And as you just mentioned that you're a loan broker, and a lot of our people in the audience may not understand the difference between just a loan officer and a loan broker. And I know we've worked some difficult situations, and
yes, we have.
No matter what the circumstances are, you can tend to find a solution for them. So can you explain this little difference between just a loan officer and you as a broker?
Well, absolutely. A loan officer is a person who works for a traditional bank, traditional credit union, or an online finance institution. And before we get started, there's nothing wrong with any of those. I actually have bank accounts. I have a credit union accounts. But a loan officer is limited to the bank or credit union's offerings and products. Everyone has FHA, everyone has a conventional products, and some have HELOC products. The difference between the loan officer and a broker is, like myself, I'm a mortgage broker. I have relationships with over 30 different lenders. So when you come in, let's just say your FICO score is a little bit lower and it doesn't meet that particular bank's or credit union's program guidelines, well, I have a program for you for not so good credit. Let's say you want to build from the ground up. Well, I have construction programs with different lenders that we can get you from the ground up. If you want to put a pool in your backyard, I have a renovation loan that works for you. If, let's say, you need a reverse mortgage to limit your monthly incomes, well, we have those programs for you as well. If it can be done, we can do it. So the difference between a broker and a loan officer has just one product from a particular company. Brokers have multiple products from a wide variety of companies. So pretty much that's it.
Yeah, I appreciate that because the way my clients have been able to benefit is that, usually I refer them over to you and you do the fact finding, that you can get into the details of what they're really dealing with, what's on their credit report, what their financials look like, challenges and concerns, and then from your array of options that they have, you can figure out which best fits for them. And I really appreciate that because a lot of them are getting turned down because the specific credit union or bank they're working with, they just don't fit in, like you say, their model or their overlay. And sometimes I found with home assistance program or even we got the Cal Halfa grant out there now.
Yes, we do.
And when things start coming out, I had a call this morning from a client, wanted to know if I knew about a program that B of A is doing. It just rolled out 2 days ago, and it's like you have to find the lenders who know about the program, and key is willing to do that extra paperwork because I've had lenders like, I don't do home assistance because this is too much paperwork or whatever, and so we have to understand that we need to have options, and so you've been a very valuable strategic partner of mine, and I just want to just put that out there and let people know there is a difference, and you can work with them, so appreciate that.
Well, I would say this, Sharon. You and I have worked together for multiple years, and all of our deals, whether they're the easy ones or the challenging ones, it's always been a great journey with you.
Yeah, exactly.
That's what I can say, right?
Exactly.
And I always tell the clients, you want to have options.
Yeah.
I liken it to, backing it back up to the whole broker versus LO. You can't typically go and order a Big Mac at Burger King. But
Exactly.
what if you could?
Right.
What if you could? In this world of mortgage financing with a broker, you can. You can say, hey, this is what fits me. You come to a one-stop shop, and like you mentioned, what if you need down payment assistance? Most banks and credit unions don't offer that. Some do, but most of them don't. What if you, like I said, you need anything if you're a self-employed borrower, but you deduct a lot of taxes, a lot of expenses on your tax returns? Well, your income on taxes are very low. However, we have bank statement loans that work out for you, that you can now get a loan based off of your bank statements and not your tax returns. The deal about myself, what makes me unique, I'm a unicorn. I've been on the operations side and I've been on the origination side. So as an underwriter, as an underwriting trainer, as an underwriting manager, I know the programs. So when you call me, I tell people, use my expertise. I've been in this arena for a very long time. Use me for the knowledge. And when you come to us, I pre-underwrite every file. We look to make sure that there's nothing that's out of place. And so by the time we actually submit it to the underwriters, we are getting these loans closed in about 15 days. And it's been crazy. You know that.
Yeah, I've witnessed that you've gotten them closed in like 2 weeks. And I want to talk a little bit because you mentioned the underwriter several times about you not only working as an underwriter but training underwriters. And underwriters are are these people that we hear about and that loan officers call us about, that the underwriter needs this, the underwriter's questioning that, but we never have direct contact with them. We don't understand sometimes the underwriting part and this invisible person.
Absolutely.
So can you give us a little insight as to what the underwriter's role is in the relationship to you as the broker and the client? Because that seems to be the one that we need to satisfy to get our loan approved.
Absolutely. Well, you definitely have to satisfy the underwriter to get your loan approved. In relationship to the borrower, the underwriter is almost like the managing agent of the deal itself, of the conditions that you need to meet. And so the underwriter's deal is to look out for the best interests of the company. They want to make sure that if they lend this money, whether it's $500,000 or $1 million, that there's nothing shady about the deal. There's no fraud involved. The person who says, hey, I want to borrow this money can pay that money back. So they're going to look at and scrutinize the deal to make sure that all the T's are crossed and all the I's are dotted. And that's what the underwriter says. He's going to look for your income. He's going to calculate your assets, make sure you have the appropriate amount of assets to close. He or she is going to look at the property profile, the title report, to make sure that there's nothing on title that's standing out, any judgments or anything like that. Make sure that you are who you say you are, looking at your Social Security to make sure everything matches the file, just
Right.
to the T, okay?
Exactly.
So that's what you got to go through now. In today's standards, now underwriters are a little bit different than they were back in the day. We had to do a lot more back in the day years ago. And now you have underwriters who are coming on. It's no fault of their own, but they're new. And so they're going by what they were taught, and they're really sticking to just the basics. They're not thinking outside of the box. Well, that's why you have somebody like me to think outside the box for you. And when they ask for items, if that item is not according to guidelines, I'm saying, hey, this is the guidelines that Fannie Mae, Freddie Mac, or FHA has in this regard. Why do you asking for that? Why do we need that? We don't have to burden the borrower with that particular condition because it's not part of the guidelines. You would like to have it, but it's not required.
Exactly. I appreciate that. And one of the last things that I just want to mention before we go to break is that one thing that I've seen you do that I haven't had the experience with other loan officers, or at least I haven't got the feedback from clients, is that because of your background, well, if you kind of anticipate what the underwriter is going to look for, and so you're very proactive, and you don't like to piecemeal a loan package. You like to get everything there, and then sometimes the client understand why is he asking for this before it's even requested, and I just think that's an asset and not necessarily a detriment, but people don't always appreciate that. But I think that your insight into the underwriting world and being able to anticipate and have those conversations that you reference has definitely helped you close deals in 15 days versus 30 or 45. And, as a realtor, I understand we have a 45-day escrow, and then on day 43, we're begging for 10 more days for some reason. Sometimes it might be documentation that's needed that the borrower couldn't find, but a lot of time is that we weren't as proactive and we got these conditions that came out sideways that we only found out about on day 41 instead of day 2.
Exactly. And just to give you a case, we just closed one that was 10 days. In 10 days.
I remember talking to you about that. So it can be done. It doesn't take forever to get a loan accepted and processed. Every lender is different, but we want to, again, bring you resources like TR, the loan guy, on how he can help you. We're going to take a quick break now. When we come back, we'll continue to talk about real estate funding and what's out there, especially with the current interest rates. And we'll just talk general, but stay with us, and we'll be back shortly.
Fire Up Connect is the most innovative business networking group, supporting and collaborating with a dozen of small businesses that are interested in building and establishing strong business connections, hosting educational live seminars while carrying out business and community-driven projects, as well as marketing programs as a part of its membership program. FireUp Connect also offers virtual assistants with a wide range of services including inbound customer support, chat support, appointment setting and email management, graphic designing, video editing, web design and development, social media marketing, e-commerce solution, content writing and much more. For more information, head on over to www.fireupconnect.com. FireUp Connect, helping success stories unfold every day.
The toughest part in the lending process is patience. Like I tell all my clients, once you get those keys in hand, it'll all be worth it.
Everything that they said they were going to do, they did. I saved so much money working with First Lending Solutions. I love my new house. I couldn't be happier.
So reach out to me at First Lending Solutions so I can help you get started.
You can contact Defina Miller with First Lending Solutions at 951-973-0123, definamillermortgage.com.
Are you a real estate investor looking for a new opportunity in one of the top tourist destinations in the world? Look no further. Welcome to Punta Cana. Perla Bahia is a private resort-style community in Punta Cana that consists of modern condos, custom villas, and various commercial amenities. So if you're interested in learning more or joining us on one of our monthly investment tours, don't hesitate to contact me today at 909-494-2280.
Choose power today and help us create a cleaner planet. Over the past years, utility prices have rapidly increased. Power provides home energy solutions that would save money. Power is the world's first virtual solar company that aims to adopt sustainable energy worldwide. Our company delivers low-cost, clean, and reliable energy solutions. The solar investment allows you to become eligible for an income tax credit. The solar investment is a great way to provide long-term value. Power is the first solar company that reduces carbon footprint for a cleaner environment. Power is experienced and one of the fastest growing solar companies in the United States, which provide the best solutions according to your needs. Call today for your free solar consultation. Join us as one of our ambassadors and earn $1,000. Earn $1,000 when the installation is completed. Free sign up at www.power.com/marie.waite/ambassador. Feel good about what powers your life. Marie Waite, your solar consultant. 951-378-5316. Enjoy your life with solar.com.
Welcome back to the International Wealth Builder radio show with your host, Dr. Sharon Barnes. I am here with TR, the loan guy. In the first segment, we were talking a little bit about his background and underwriters and about getting your loan package approved. I'm glad you stayed with us for this segment where we're going to be talking about real estate financing in general, basically what type of financing people are utilizing now for real estate deals, buying, purchasing, even investing and building accessory dwelling units. And then we're going to talk about that elephant in the room, the interest rates. How did that affect the market? What does he anticipate? And how is it, affecting people trying to finance real estate transaction and build accessory dwelling units? So thank you for sticking with us. Welcome back, TR, the loan guy.
Thank you for having me.
Can you talk a little bit about the real estate market? The interest rates went up, and I know from a licensed realtor standpoint, it slowed everything down. So we went from houses been on the market for 48 hours to 48 days. Okay, beautiful homes we think are priced right, but they're not moving. We hear anticipation of rate changes again, and then the question always is, when should I buy? Should I wait? No one has a crystal ball. I always tell them whenever they can qualify. So that's your arena. So can you tell us what we talk about that elephant about that elephant in the room with the interest rates, what we can look at, and how you advise us to proceed?
Absolutely. Let's talk about the elephant in the room, the interest rate. Today's interest rate is definitely higher than it was pre-pandemic, okay? Before the pandemic, we were looking at high 2s, 2.75, up to roughly depending on your FICO score, let's say 6%, and it was a range between that. Most people were between a 2.75, 3.75, and some people would go 4. And there are other niche products that will go above 6, but those are the niche products that for specific use case scenarios. Sitting today, we're roughly between high 4s, 4.75, going up into the 7s, okay? That's the range depending on your FICO score and your particular situation. And those niche products after that are going between 9 and maybe 12% again, okay? Is it higher than it was 2 years ago? Yes. Is it at historically highs? Absolutely not. I still remember when we had double-digit regular conventional interest rate loans.
I bought my first house with like 16% interest.
Exactly.
Just giving away my age, but I mean, and we were just happy to get the house as first-time buyers, right?
Happy to get the house. So people are used to the super low interest rate, but they're still relatively low. The issue that we see now is the fact that the house prices were going up. Traditionally, when rates go up, house prices come down in a kind of a seesaw arena. What we've been seeing here is something we haven't seen ever, where the house prices were going up and the rates were going up at the same time, and they weren't coming down as fast. So that's something that no one has seen, and if they say they have, they're lying to you. It's been incredible, volatile market. The rates have been all over the place over the last few months. They'll go down one day, and the very next day they'll go up, and you're like, what just happened? I just had a situation that we had to overcome in this last deal I just did, to where we had a rate, and in order to lock the loan, you have to submit the file first. So on the day that we put it in, it was a particular rate, I think it was like 5.2. By the time we got the loan submitted and the next day we were ready to lock the loan, the rate went up to 5.875. And really, literally a 10-hour difference, okay? It went up. And so rates are volatile. They go up, they go down, and that's just the way it is. However, what's the best time to purchase a home? I agree with you. Right now, if you can afford a home now, it is the best time to purchase. Why? Because we cannot tell you that house prices are going to fall down to a particular price point. We just don't know. Realtors don't know. Mortgage brokers don't know. Loan officers don't know. We can anticipate that it will come down, but by how much we don't know. Again, interest rates have risen, and so have house prices. They've been pretty much holding steady. They're starting to come down a little bit, which is great for consumers. So if the house prices come down a little bit, you can buy more house. Is it going to come down to where it was 2 years ago? I don't think so. Do I know? Definitely, no, I do not. But based off my experience, I don't think we're going to get back down to where we were 2.5 years ago.
Yeah, and everybody's trying to anticipate, what it will do, and I just know that when it went up, people, like you say, they had locked loans, and it went up, and it priced them out, And even for a house now, we're saying if the house is like $430,000, they have to qualify for a $3,200 mortgage, okay? Plus the gas is going up, so they got to drive further. Is this expensive? This is just a new world out here. We're expecting or dealing with things that we haven't seen before in a variety of areas. This is not post-pandemic. We're not even, I can't even say post-pandemic, okay? This is like opening up after, the initial shutdown. It's just been a new world, and everybody's trying to maneuver, and so no one has a crystal ball.
And I agree with that. And one of the things that I'm going to use the word hate. I hate this, is the fact that a lot of LOs, a lot of lenders, when they
loan officers,
loan officers, when they quote estimates to the borrower, they're giving usually just a principal and interest. That's not the entire expense of your mortgage. You have the principal and interest. Yes, that's the big portion of it, but you also have to do property taxes. So I calculate the property taxes for the property, and we put it into that because you still have to pay property taxes. You also have to have homeowners insurance. Well, that's a charge that goes with the mortgage, so we got to put that in there as well. And let's just say you're in a planned unit development or a gated community. There's also HOA expenses let's say it's $40, $30, it can be $185, just depending on where you live. You have to get qualified on all of that, and you need to know what that's going to be, because that can take your loan from $1,500 to $2,500, depending on the area that you're in, and you need to understand it up front before you close this loan.
Yeah, and the other thing that I'm seeing is the energy efficiency. You know, we all
Yes.
want that, and we have the law now that with new construction, you got to have the solar panels on it. But because solar panels are coming out more and more, we're finding, you know, the average homes are having solar panels on them. But when you're going to buy that property or it's listed, you have to know first of all, is it included in the price or is it a lease? If you're
Exactly.
leasing the solar panels and the lease is going to transfer to the new borrower, you have to qualify for those solar panels in addition to everything you just listed.
Absolutely.
Again, something else that by the time you add in all those fees and that monthly obligation, you're out of luck to purchase that home.
So let me talk about solar panels, if you don't mind.
No.
So you have two different ways of getting solar panels. You either purchase them and you either can pay cash for them, or you finance them to where you own them. It's like buying a car. But if you finance them, you have to add that particular monthly payment into your debt to income ratio, which you use to qualify. If you are leasing them or renting them back from the solar company, which means that they're on your home, but you don't own those panels, you simply buy the energy from the solar company just like you would buy from Edison or any type of a utility company. That does not factor into your debt to income ratio when qualifying for the home. But your loan officer, your mortgage broker, your lender has to know the difference, and they have to calculate it accordingly up front so that we know when we're doing the loan. And that's where, like I said, I come in because I see these things up front and I ask for the documentation. Is it a lease or are you purchasing them? Before the underwriter gets to look at it, before we get down to a week before we close, I already got the documents in hand, so we know. So when we submit it to our underwriting department, they have the paperwork, they sign off on it, and we're good to go.
Sounds great information because we're dealing with this on a daily basis all the time. So I want to talk to you or ask you about HELOCs. You mentioned them earlier. I don't think everybody understands, but it's also a great transition into accessory dwelling units.
Yes.
And for those who might not know, just the accessory dwelling unit is the ability of someone to add an additional living space on their existing property. So you have to have a main house and you have to be able to meet certain setbacks about 4 feet from your property line, and you can build an accessory dwelling unit, commonly referred to as an ADU. A lot of people are doing it. I've really been engulfed in this for over 3 years now, and like I said, I've talked to hundreds of homeowners, and we are learning. The laws are evolving. They just updated this past July. We're anticipating another big change at the first of the year. But accessory dwelling units are a way for us to be a part of the solution for a housing shortage. It's a way to create generational wealth, and it's a way for us to take care of our loved ones and to provide housing, affordable housing. Okay, and we have traditional investments where people have, to the flipper, the buy and hold, or whatever. And everyone always says California property is so expensive, and yes, it is expensive. But one of the ways right now that you can cash flow and leverage California real estate is to add that accessory dwelling units, because from what I've seen, no matter how much it costs, the rental income and the benefit to your family and what it could do to your economic wealth, it's more positive. Okay, so I want Terrence to talk about the HELOC because I found that a lot of people are using HELOCs to finance their accessory dwelling unit, and these are usually our young homeowners that's bought in the last 3 to 4 years or 5 years. So I just want to have more understanding of that and how it relates to accessory dwelling units.
Absolutely. I'll actually talk to you about two ways to finance your ADUs or accessory dwelling units. But before I say that, I have watched you over the last few years become from a novice to an expert in these ADUs.
Thank you.
out there in radio land, if you have questions about an additional dwelling unit, I'm telling you, Dr. Sharon Barnes is the person you want to talk to. She is a wealth of knowledge when it comes to these things, okay? Shameless plug for you, but it's the truth.
Thank you very much. Appreciate that.
You're very welcome. Before I get to the HELOC, there are two main ways of actually financing an ADU, okay? You have a traditional, three different ways. You have a traditional cash out refinance, and that cash out refinance is you have to have equity in your home currently. You can tap into that equity, and usually up to between 80 to 90% of the home. If you have equity, you can bring that out as long as you meet the criteria with FICO score, as long as you meet the criteria where you can meet the minimum payment requirements, okay?
Okay, so we're gonna have to take a break here. Okay. I am so sorry.
No problem.
Okay,
I'll come back.
I asked a very complicated question, but we're gonna take a break. Please stick with us so we can talk more about the HELOCs and financing your accessory dwelling unit. We will return at the radio show after a short break.
Choose power today and help us create a cleaner planet. Over the past years, utility prices have rapidly increased. Power provides home energy solutions that would save money. Power is the world's first virtual solar company that aims to adopt sustainable energy worldwide. Our company delivers low-cost, clean, and reliable energy solutions. The solar investment allows you to become eligible for an income tax credit. The solar investment is a great way to provide long-term value. Power is the first solar company that reduces carbon footprint for a cleaner environment. Power is experienced and one of the fastest growing solar companies in the United States, which provide the best solutions according to your needs. Call today for your free solar consultation. Join us as one of our ambassadors and earn $1,000. Earn $1,000 when the installation is completed. Free sign up at www.power.com/marie.waite/ambassador. Feel good about what powers your life. Marie Waite, your solar consultant. 951-378-5316. Enjoy your life with solar.com.
This is Steve Matley. Join me every Thursday at 3 p.m. right here on KCAA for Building Solid Foundations radio talk show. I spent decades as a professional construction manager, business owner, real estate developer, and a college educator, and I enjoy learning new things from other people. We talk a lot about real estate, business, and finance, but we cover a diverse range of other topics as well. Some of the topics we've discussed in the past few months include real estate investing, leadership, higher education, ADUs, marketing using technology, multifamily rental properties, business strategy, entrepreneurship. You never know who may show up or what they may talk about. So join us right here on KCAA for Building Solid Foundations Radio.
Are you a real estate investor looking for a new opportunity in one of the top tourist destinations in the world? Look no further. Welcome to Punta Cana. Perla Bahia is a private resort-style community in Punta Cana that consists of modern condos, custom villas, and various commercial amenities. So if you're interested in learning more or joining us on one of our monthly investment tours, don't hesitate to contact me today at 909-494-2280.
Welcome back to the International Wealth Builders Radio Show with your host, Dr. Sharon Barnes. You can find me online at ADU Advantage, YouTube, Sharon Barnes Real Estate, and we're here with TR the Loan Guy, talking all about loans and financing your real estate purchases and investments. And we're getting into my area that I love, accessory dwelling units. So TR, you will continue. You were telling us about how to finance different products and ADUs.
Well, absolutely. Again, we have roughly three basic ways to finance the ADUs besides you just paying out of pocket. The first was a traditional cash out refinance loan of your property. As long as you have equity in the home, we can go up to, in some cases, 85 to 90% of that, and you can pull out the equity of the home and utilize that to simply pay for your ADU. Once you close this loan, the cash is deposited into your bank account. You then take that money and you can pay your contractors and all of the things that we need, okay? The second way to do this is, again, you have to have equity in the home, but we can do a HELOC, a home equity line of credit. And what the HELOC is, again, you have to have equity in a home. We tap into that equity, but we don't refinance the entire home. We only refinance a portion of that equity. So you still have your first mortgage. We don't touch it. But now you have a second mortgage, which is a HELOC. And normally a traditional HELOC, you have two different ones. You can have a 30-year HELOC where you have 10 years and you can have 20 years to pay it off. Or you have the ones that we kind of go into now where you have a 20-year HELOC, 10 years you have a line of credit where, let's say you get $50,000 out. You can utilize that line of credit. You can pay it back. You can utilize it again for up to 10 years. After the end of the 10 years, that line of credit is closed, and whatever has not been already paid, so let's say you have $25,000 still owed on it, now you have 10 years to pay off that last 25%, and then once that's done, it's closed. So the difference between a cash out and a HELOC is a HELOC, you're going to have two separate mortgages. The first, which is your main, and the second was the line of credit. And you pay that off as by the end of the 20 years.
And I think what we've seen is that, as you mentioned earlier, that the before COVID and everything, we had interest rates down to 2.5.
Yes.
So we've had clients that want to build accessory dwelling units, and they love their interest rates, and they don't want to touch with the increased interest rate, so they decide to go with a HELOC. And so we've seen quite a few HELOCs. And what surprised me when I started looking at accessory dwelling unit, I was thinking it would be the older individual with the small house that's been there for 20 years that wanted to do the accessory dwelling unit. And what I'm finding is that it is the homeowner that's had a property, say 5 years, because the property values went up so high, and they have so much cash. Even now, I mean, we say they're coming down slow, but if you bought several, years ago, 5 years ago, you're still sitting on a nice amount of equity.
You are.
And everything. And so what we're seeing is that these young adults that have been fortunate enough to buy their home in the last 5 to 7 years are taking out HELOCs to build accessory dwelling units. And from the ones I talked to, I would venture to say about 60% is to take care of family, okay?
Absolutely.
Okay, and so even if they're not looking to make rental income from it right now, it still increases the property value, it has tax benefits, and it benefits the family. So taking out that HELOC and improving your property, it still works out. So yeah, I think this is just awesome. But I just wanted to point out, when we talked about the elephant in the room, those high interest rates, that one of the tools that you are able to use to help people is the HELOC to make improvements to their house, to build an accessory dwelling unit, and not touch that great loan interest rate that they have already.
Absolutely. The HELOC is a great program, and because it's usually so much smaller than a traditional loan, the monthly payments are a lot smaller as well. So it is a great way to do it. And I didn't mention, but usually the first 10 years you're only paying, it depends on the product you get, you can pay either interest only, and then once that interest only time is up, you can go from to the regular amortization schedule, or classic HELOCs, you pay both interest and principal as well. Okay. But are you about to go to lunch?
We got a couple minutes. I just want to talk quickly about the construction loans or the rehab loans that's out there. If you can just give us a little synopsis of those type of loans.
I was just about to get to that. Renovation loans. If you do not have equity in your home, let's say you just bought your home, but you want to add an ADU and you do not have equity in your home, renovation loans, whether it's FHA 203K or Fannie Mae home-style renovation loans, are a great option. And the reason why, Sharon, is because we're going to loan money off of the future value of the property once the project is done. So when you add that ADU, you're adding square footage to your already existing property. And so after it's built, your home is going to be worth more than what it's worth now, and we're going to take the loan to value of the project, and then we're going to loan you money based off of that. We refinance the first mortgage. Let's say your ADU is worth, it's going to cost you $150 to build, and we add 10% for contingencies, the what if something happens type deal, and then the contractor needs more material. We then add that $165 to your first mortgage, and it's called a renovation loan. It's kind of a construction loan, refinance hybrid, and once it's completed, then you're done. It's like a regular mortgage.
So even what my understanding is that for like every $100,000, the payment on that is about $560, even with the current interest rate.
Interesting. We got about that. Yeah.
Okay. We're going to take a quick break, and we're going to come back. We're going to wrap up talking about financing accessory dwelling units and give you some tips for the road. So please stay with us and join us after the break.
Awesome.
Real Men of Real Estate with Steve Matley, construction manager and real estate developer, business owner, and educator.
Did you know that right now there's 22,000 units deficit?
Tunde Ogunwale, real estate development professional, Naval Academy grad, and veteran with a deep understanding of the public sector process.
All of us want to live in thriving communities.
Brian Fox, real estate expert and investor, dedicated to helping hundreds of clients make money in real estate every year.
There's so much housing going in.
The builders are begging for more land.
Future company can come in, lease up space to employ those people who are living in the homes.
We have to put the housing in place.
We either have to have houses.
They want to make sure that there's a strong employment.
Logistics centers, things like information hubs. We are a shipping economy now. There's economies all over the country where their prices are doubling and tripling.
This is Steve Matley. Join me every Thursday at 3 p.m. right here on KCAA for Building Solid Foundations radio talk show. I spent decades as a professional construction manager, business owner, real estate developer, and a college educator, and I enjoy learning new things from other people. We talk a lot about real estate, business, and finance, but we cover a diverse range of other topics as well. Some of the topics we've discussed in the past few months include real estate investing, leadership, higher education, ADUs, marketing using technology, multifamily rental properties, business strategy, entrepreneurship. You never know who may show up or what they may talk about. So join us right here on KCAA for Building Solid Foundations Radio.
Are you a real estate investor looking for a new opportunity in one of the top tourist destinations in the world? Look no further. Welcome to Punta Cana. Perla Bahia is a private resort-style community in Punta Cana that consists of modern condos, custom villas, and various commercial amenities. So if you're interested in learning more or joining us on one of our monthly investment tours, don't hesitate to contact me today at 909-494-2280.
Choose power today and help us create a cleaner planet. Over the past years, utility prices have rapidly increased. Power provides home energy solutions that would save money. Power is the world's first virtual solar company that aims to adopt sustainable energy worldwide. Our company delivers low-cost, clean, and reliable energy solutions. The solar investment allows you to become eligible for an income tax credit. The solar investment is a great way to provide long-term value. Power is the first solar company that reduces carbon footprint for a cleaner environment. Power is experienced and one of the fastest growing solar companies in the United States, which provide the best solutions according to your needs. Call today for your free solar consultation. Join us as one of our ambassadors and earn $1,000. Earn $1,000 when the installation is completed. Free sign up at www.power.com/marie.waite/ambassador. Feel good about what powers your life. Marie Waite, your solar consultant. 951-378-5316. Enjoy your life with solar.com.
Welcome back to the International Wealth Builders Radio Show with your host, Dr. Sharon Barnes, and I'm here with TR, the Long Guy. We're going to continue to talk about financing the accessory dwelling unit here in the state of California, and then we're going to wrap it up and talk to you about how you can contact us. But TR, can you continue with how we can get that ADU in our backyard?
First and foremost, I'm going to tell everyone out there, if you are thinking about an ADU, call, get your questions answered, and then start. That's the first and foremost. Don't wait till next year. Don't wait till 2 years. Don't wait till grandma's ready to move out. Get it started now because you're going to need it, okay? If you have kids at home and you say, you know what, my son has just turned 18, but he's not going to be going anywhere, but we can put him in the back. He can start, teach him how to have his own apartment. And so by the time he's out there on his own, he'd be used to living in a separate environment. If you need to have a grown kid come back, you have who has it now as a child, you have a separate space so you're not all on top of each other in one location. Or you can use an ADU to build rental income. Again, get the information. Dr. Barnes is phenomenal with how to get the ADU built. Give me a call and I will show you how you can get it financed, okay? But again, HELOC, cash out, or renovation loan are the typical ways of getting your ADU, your pool, your reconstruction financed for you.
Yeah, and as you said, there's so many reasons why people are building accessory dwelling units, and we talk about phases. It's like if I'm talking to clients, it's like we have to think about things in phases, and like you say, get started now. And with some of the loans that you've mentioned today, it's like there are some challenges sometimes when we don't fit into any of those loans. I mean, we may have to go hard money. We may have to take advantage of some program. But if we can do that for phase one, once the ADU is completed, and we can get it reassessed, like you said, that after value, because it's going to bring up your property value, it's going to increase your equity, it's going to, change the income rate. Then you can go and refinance into something that is more, amenable to you, okay, and better for you. And so a lot of times when we talk, we go trying to get from my dream to the ADU, and there's so many moving parts, and that's why you need a good team, you need a resource, and I'm trying to fill that niche. I'm here for a consultation to help you build an A team that can help you make that ADU a reality, education on the laws, the changes, what you can and can't do. But together as a team, we can get it built because we know that a lot of homeowners have never been builders or developers before. They are allowing us to become developers, right? All right.
Absolutely.
And I remember when I bought, when we bought a brand new home, my husband and I mean, going down to the design center and all the changes, and then, moving in with people because it was supposed to be finished at a certain time, and the schedule was like 3 or 4 months later, and all this. And this was after the big boys already had the land graded, the infrastructure, the setbacks, the permits, all that, and stuff still happened. So, but it's worth it. And again, we're just wanting to be part of your team to make it a reality. So, TR, how can they contact you? Tell us. I know you TR, the Loan Guy, online. How can we get in contact with you?
All right, guys. My name is TR McCarthy, TR the Loan Guy. So you can reach me at number 951-399-2002. Again, that's 951-399-2002. Go to the website, trtheloanguy.com, trtheloanguy.com. You can reach me on YouTube by, again, YouTube, and just search TR the Loan Guy, all one word. Facebook is facebook.com/TR the Loan Guy. And Instagram is, guess what? Instagram/TR the Loan Guy. If you don't mind me just saying something really quickly, you mentioned teams, and you know me for many years. Yeah. I've preached this to realtors and clients, the importance of having a team. For clients, you need to have a mortgage professional, you need to have a real estate professional on your team that you can call. That's not just looking to make the deal. The deals are going to come, the deals are going to go, but you need to have somebody that you can call even without a deal. Hey, this is what's going on in one of my family members' life. What is this the right time? What do you think? Give me the answers that I'm looking for, and let that professional give you the market synopsis, okay? As a realtor or real estate agent, you need to have a team of people. First of all, you need to have a mortgage broker on your team. I don't care. I know some people have in-house mortgage guys, but you need to have a mortgage broker for you that has multiple programs that can help your clients. You also need to have a contractor that you can call. You need to have people who do carpet. You need to have people that do flooring. So when your clients call you, you have the answer. Hey, I got a guy that can help you with that carpet. I know a guy that can get you finance as long as you're motivated to get finance, and you are the person that helps them out. You're the go-to person.
Great. We're in sync with that. So I am Dr. Sharon Barnes. I'm the owner of ADU Advantage. You can find me online at ADU Advantage. On YouTube, my website, aduadvantagenow.com. Also, general real estate information under SharonBarnesRealEstate.com. And you can reach me at 909-708-5263, 909-708-5263. And I am here to help you put that team together. As TR said, you need a team. The architect, the designer, everyone. And then sometimes a lot of my clients, they need someone to just walk with them. You want the contractor on the site doing the job. You want the architect, drawing and helping you get your permits and so forth. But you may need someone like me to walk with you, to go through the journey so that I can help keep you on point. I can anticipate and interpret what's going on, make sure that what we agree to will be the outcome. And so I'm here, but we're able to help if you're a do-it-yourselfer or if you need hand-holding from A to Z. We have resources, we have education, and we have the patient and the knowledge base to make your ADU a reality. Thanks for listening in. I'll see you next month where we will have Catherine Peoples with us, who is the administrator of the $40,000 Cal HAFA grant for ADUs. She will be here to tell us how we can take advantage of that. Enjoy the rest of your holiday weekend, and I will see you next month. God bless.